Hello, everyone. Thank you very much for joining today's webinar, which is about auto enrolment and how it's going to affect people working in Ireland in 2024. My colleague Ruth is going to put up a poll just to get, I suppose, until the numbers settle, and then we'll kick off. I'm going to spend the next sort of 25 to 30 minutes just going through areas of pensions primarily, which is what this relates to, but how you can better benefit from what the government are going to introduce. For those of you that haven't listened to one of the webinars previously, and we do run these quite frequently, and I would ask you to maybe keep an eye out on those. Myself and my colleague David Looney will be doing some over the next coming days in relation to financial kickstart, particularly early in the year for anyone who's listening live. In terms of Alpha Wealth, we're a progressive financial services company. We've been in existence for 10 years. We're actually celebrating our 10th anniversary at the end of April, and Michael McGrath is coming to our offices in Cork. We do have a presence in Dublin with 10 staff altogether, managing over 300 million of investments with over 60 years of a combined experience. Hopefully you can see on the screen there just some of the members. Myself, I'm joined by Clean O'Donoghue, who's our Director of Business Development, and also Ruth Murray, who's head of our marketing team. So without further ado, just to get into the nub of today, what is auto enrolment? Auto enrolment is a government scheme that's going to be introduced, we believe, on the 1st of September 2024, where all employees of companies will be mandated into a pension if they're over the age of 23 and if they're earning over 20,000 a year, where a company will have to pay into a pension for them, not just offer them the facility which currently is in play. Now, this has been going on for a long time, and it was talked about over 5 years ago. And if you can see in terms of just some of the recent history, the government have delayed, and it's been going through, I suppose, various phases, but they've insisted that it is going to come into effect, and we will know more in the next month or two exactly what day, but it seems very clear it's going to be no later than the 1st of September 2024. And what I'm really saying to company owners and businesses, as well as in the employees, is you should start budgeting for this. You know, it's important when you are setting out plans for the year, budgets and so on, that you allow for this, both from a personal individual perspective, but also for the employer. The other thing I want to get across in today's session is I'm a big, I suppose, advocate for not allowing yourself to be auto-enrolled. It's not an attractive scheme, and I'm going to explain to you why in more detail. But let me talk a little bit more about the specifics and what it actually entails. So basically, as I mentioned earlier, if you're aged between 23 and 60, you'll be automatically involved in a scheme if you're earning over 20,000 a year. It is mandatory for the company to enroll you. And if they don't, there's severe penalties and possible imprisonment for employers. So you can see how seriously the government are taking this. And there will be a cap on the contribution rate, which I'll explain in a further slide. But basically, for every €3 that the employee puts in, the government will add one, which effectively equates to 25% of a top up. And the employer will have to meet the employee's contribution capped at a certain percentage. Sorry, Cleo, I can't hear you there. I'll just keep going. So basically, just in terms of the opportunity, auto enrollment does have some advantages, particularly from the employer's perspective, in that it is forcing companies to pay into a pension scheme, and therefore it's giving them the opportunity to maybe attract new staff. Obviously, if you're in a company where there's no pension scheme, it may enable, obviously, companies to hire more people, but also retaining existing staff. It is a benefit, obviously, as I say, which I'll go through. So how does it work? Well, specifically, you can see on the chart here that from this year, which is obviously the first year, up to the third year. So for the first 3 years, it will be set at specific figures of 1.5% of the employee's salary, 1.5% paid by the employer, 1.5 by the employee. So there is a mandatory payment from the employee. And then every 3 years, it's going to increase by 1.5%. Now, to me, that can be a positive, but also a negative. It does force employees to pay more money every 3 years, and potentially, 9 years from now, you're looking at a percentage of 6% of your salary. Whether or not you want to pay into that or not, if you're in an auto-enrolled scheme, you will have to. This is, I suppose, an illustration for someone earning 40,000 a year, whereby on the simple maths of it, 1.5% of 40,000 equates to 600 euros. That's exactly what that employee would benefit from the company paying into a pension for them. And that's the gross amount that they have to pay, which equates obviously to about 50 euros a month. They will get tax relief, as I say, in terms of the 25%, but it's done automatically, so it doesn't actually work in the same way that company pensions operate, which is one of the major disadvantages, which I'll explain in a bit more detail in a moment. And then you can see, obviously, what those amounts go up by every 3 years. So potentially for someone earning 40,000 a year, 10 years from now, they will pay in 2,400 of their salary into the pension. The company will meet that payment, and the government add in a further 800 euros per year. So why am I against auto enrollment? And this hopefully chart, Master Trust, which is just a name that's now given to company pension schemes. And there are a variety of different types. There's PRSAs, there's company pensions. But just to explain the differences, if you are auto enrolled, so for example, if you are an owner of a business, or if you're, in HR, or if you're an employee, and if the company is not paying into the pension, you will be auto enrolled, and you have no ability to pay additional monies into your scheme. You cannot pay more than the 1.5%, and neither can the employer, and it's fixed. The other disadvantage is if you are earning over 42,000 a year, i.e. on the high rate of tax, which is relevant from January 2024, you're only getting a 25% benefit. Whereas if you pay into a pension scheme, in a company pension arrangement, which I am advocating, you will get 40% tax relief. So you're missing out on 15% relief. And there's about 200,000 workers that are in that category of higher tax rate payers with no company pension scheme. It's massive, obviously, opportunity for those people not to be auto-enrolled. One of the other major disadvantages to auto-enrollment is that you can only access the scheme from the state pension age. So typically, currently, that's 66 years of age. It might be increased in the coming years. That's not going to be as useful as a company pension arrangement, where if you leave the company, say, at any stage from the age of 50 onwards, you can take that benefit, which may enable you to do other things that you may want to do in life, such as pay down a mortgage, help your kids through third level education, buy a holiday home if that happens to be, one of your main financial objectives. So again, why auto enrollment is not in any way an ideal scenario, and I'm going to show you how I believe that you can navigate that. So let's say there's a company that has 10 employees. So this is, my own company, Alpha Wealth. We have 10 employees. This is not the salary count, but just to give an example of salaries ranging from, say, 30,000 up to 50,000, just taken as a rough scale. You can see there the cost of auto enrollment to that business will be about 6,500 euros in the first year. In the fourth year, when auto enrollment goes up to 3%, that cost will go up to about 13,000 a year. In 6 years, it'll be 19,000, and 9 years, 26,000 a year. So it's a fairly significant cost to that business. The total amount over those 10 years will amount to about 144,000 euro. However, if you set up a company pension scheme before the 1st of September, which is exactly what I'm advocating these companies will do, you can set the rate. You could set it at 1%, for example, which would only cost you 4,300 in that year. You may set it at the 1.5% level and cost 6,500, but you don't have to increase it every 3 years. And I've done on the right-hand side just a quick summary of the total saving over those same 10 years. You can see it amounts to a significant figure, somewhere between 80 and 100,000 a year, depending on which initial level you opt for. Now, this is not trying to do employees, out of contribution levels. The company can decide, but it gives the company a lot more wherewithal to become more flexible, because they can decide to go up quicker than auto enrollment allows. They may decide to make lump sum payments on behalf of the employee, say, for example, for bonuses, which again, auto enrollment does not allow. As well as that, they don't have to mandate the employee to pay into the pension. So they may enable the employee to have a pension scheme, but not force them to make a contribution. Again, auto enrollment does not allow that. This is just a very quick summary of the major disadvantages of auto enrollment. I've spoken about the expense and more about the fact that there's no flexibility with that. Obviously, if you think about it, 9 years from now, if you hire a 23-year-old, they're going to have to pay 6% of their salary into a pension, and you're going to have to pay 6% into it for them. That probably won't suit them or the company. There's no flexibility, as I said, for payments for both the employee and the employer. There's no early access, which to me is a massive issue. The reduced tax relief for those on the high rate of tax is a massive problem for anyone who earns over 42,000 a year at any stage in their working lives. And also the administration hassle, because there may be companies listen to this call that have a pension scheme for staff. But if every member of staff is not a member of the pension scheme, you will find auto enrollment for those members that are not. So again, I can help you understand about the fact that those members need to be joined in, mandatory, into the scheme, and you may have to adjust the existing scheme that's there, which no major hassle to. The other problem with auto enrollment is there's no advice given to employees. The government are not going to sit with employees and explain pensions and explain to them about, what retirement looks like for them and projections, which is what a company pension scheme allows through the likes of brokers like Alpha Wealth, where we advise companies and we select the best companies in that environment. There's no choice in auto enrollment. There's going to be a blended approach of 3 providers chosen by the government with no variation and no variation of funds that they can opt for. Lastly, opting out of auto enrollment. So you might be wondering, okay, well, if you don't want to be a member of the scheme, can you do anything to get out of it? And what the government have decided is that you have to be a member for the first 6 months. And after 6 months, you can opt out and get a refund of the contributions since the start. But after 2 years, they will re-enter you into the scheme. And then 6 months after that, you may opt out again, and so on and so forth. It's very messy and certainly not something. They're really trying their best to keep people in a pension scheme, because obviously they're trying to encourage pensions independent of the state pension. And obviously from that perspective, they're going to make it more difficult for people. And they, I suppose, factoring in people's inertia that if they're opted in, they may obviously just forget to opt out or just might not be bothered to.
So Nick, can you hear me now?
Yes.
Okay, perfect. Thanks. I've 1 or 2 questions for you. So what if an employee already has a PRSA?
So it depends on whether the company's paying into the PRSA. So PRSAs are a type of pension where if you're in a company and if you weren't paying into a pension for your employees, the government insisted that you had to offer them the facility to pay into a pension, and that's what was called a PRSA. The problem with that, though, is that PRSAs tend to be very expensive. Typically, you have only about 95%, maybe as much as 97% of the employee's contribution going into the scheme. and that's a big problem. But the fact is that the PRSA is not going to work unless the company's paying in for all employees into that arrangement. And I wouldn't opt for a PRSA personally. It's not a particularly attractive product at that level.
We have a few questions that we'll address there now, if that's okay. And is that okay to take them now?
Yes, and I should have said earlier, if anyone does have any questions, we will answer them. If you want to pop them into the Q&A, please do so. We did receive some questions over the last couple of weeks, and obviously there will be more information provided to anyone who wishes to get more details. We will send out this video with the slides and a little bit more information on auto enrollment. We had 2 articles published recently in the Sunday Business Post, which we can share with you as well. I'd like to think that we are fairly expert in this topic, and it is, as I say, a really big area for businesses and for employees, and making sure that you're benefiting and navigating the scenario that we're going to find ourselves in.
So is it true that you only get the government contribution and the auto enrolment pension scheme? And would that compensate for the additional tax relief if the salary is over 42,000?
No, so the scenario is the government will apply the extra contribution rate at 25%, no more. Doesn't matter what level of salary you're on, and they'll cap it at 80,000 a year. So for any employee that's earning 42,000 a year or more, you should run from auto enrollment like the plague, i.e., get yourself in a situation where the company sets up a company pension scheme, and it's better for the company and it's better for you.
If a person joins a company after being auto enrolled and is already paying in 4.5%, does the new employer have to continue, or does that person go back to the 1.5%?
If the member joins a company that has an auto enrolled scheme, then they'll become part of the auto enroll arrangement. It depends on obviously the employment contract as to what was agreed by the company in relation to that, but they can set up a company pension arrangement for that member. Again, it'd be messy if they have an auto enrolled scheme and then they're trying to apply one member to that. So there's going to be a lot of variations here, but typically for that member, you need to find out what the situation will be with your employer. And again, what I'm trying to do is give people time. The biggest problem I find, and with conversations I've had with people, is that they seem to want to wait until September and see what it looks like. And I'm saying to them, but you can't do that. You need to start planning and you need to start navigating this scenario. Now, I'm not saying you have to start that pension scheme today. What I'm saying is align yourself to the fact that it's about getting information and being ready. And I'm saying if I was a business owner, which I am, that didn't have all of my members in a pension scheme, I would have a pension scheme in place before auto enrollment date. So get ready to start it. And if it's before September, make sure it starts before then. And if it is the 1st of September, make sure it's ready, obviously in August.
So Nick, on that, if somebody joins your company, are they auto-enrolled on day 1 of employment, or is it after a 6-month probationary period, which is pretty typical in a lot of businesses?
It's a really good question. So the period, the employer can defer payments for up to the first 3 months, but it's not based on the employee's passing of probation. So the short answer to the question is the employee will have to be made a member of the pension scheme no longer than 3 months after starting employment. The employer can defer starting the pension scheme for the first 3 months.
And how does it work then for people on maternity leave, leave of absence, parental leave, unpaid leave? You know, does it stop and start again, or how does the contributions work?
There is a facility to pause contributions for events like maternity. Obviously, if it's after the first 6 months, the employee can decide at any stage for contributions to be stopped. the employer will obviously stop in line with that. So, as I say, realistically, it does allow, the pauses, but the key thing is that, from my perspective, as I said, and not to repeat myself, I'm trying to make employees aware of the fact that it can be seen as a positive. You are going to benefit from the 1.5% contribution at the minimum, but from the point of view of both the employee and the employer, it would be better for you to have a company pension arrangement that provides a lot more flexibility and potentially allows the employer to set the figure that they're happy with. 1.5% isn't typically a large contribution by any means. The average tends to be somewhere around 3 to 5%, but it avoids that kind of constant increase every 3 years. And then it avoids all of those disadvantages that I've alluded to.
And how does it affect temporary workers versus permanent employees? So for people temping.
It's a good question. And again, there's a little bit of detail that we're still waiting for. And one of those is around temporary workers. There isn't a requirement currently for temporary workers to be involved in auto enrollment. But again, we're waiting for the detail for clarification as to whether they will be. Whether you're part-time or not is irrelevant. Again, it's all based on 23 years of age up to 60, 20,000 a year.
What about small companies with only 5 to 6 people? For a managed company pension, is there a minimum amount of employees?
No, you can have one employee and have the same arrangement as if there was 100 employees. There is some other, I suppose, benefits, which I'm just going to talk about briefly, which is that if you have 3 or more employees in a business, not only, is obviously pensions going to be relevant to you. Obviously, there's costs associated for the company, but you can look at what I call group benefits. These are sort of areas such as death in service and income protection primarily, where if, let's say, you have a husband and wife owners of the business, or husband and partner, whichever, and then you employ one other person, all 3 of you can put in place these provisions at a very low cost. I normally suggest it at the time of talking about pensions because it's like an add-on where there's no medical requirements. It's a fraction of the cost as it would be if you have your own separate arrangements. And it's typical for obviously larger companies, but it can be as easily affected for very, very small ones. We've introduced this in Alpha Wealth. We're a 10-person firm where we have death in service and income protection. There's no medical requirements for any of the employees. It's a very low cost benefit. And again, it's all about retaining and attracting staff, which allows you, obviously, again, not being morbid, but in the event of someone being out injured, sick, or God forbid, if they pass, there's going to be financial provisions there to help them and obviously their families in the event of. And just to mention, one of the key things, and for those companies out there that already have a pension scheme in place, maybe with not much of a take up from employees, now is a really good time to review your plans, because I've spoken about fees. I'm a really big advocate of the fact that it doesn't matter if you already have a pension scheme. The key question to ask yourself is, how much of the money that we put into this pension is being allocated into the actual pension itself? And what that is known as is the allocation rate. And if it's not 100%, you're not benefiting at all favorably. I've come across so many companies where they say that they have a company pension, but there's only 95% of the money is going into the pension scheme. The broker effectively is taking 5% of each payment, which is, really obviously uncompetitive. The other thing is around the funds and the performance of the funds. So as an independent broker, I'm an advocate for Zurich. Their fund performance has vastly outperformed their peers. This graphic illustrates the point. I've done a quick illustration between Zurich's performance versus 3 other providers, and they have vastly outperformed. Now, again, I'm happy to talk to any owners, any employees around their arrangements, but it's about getting appropriate advice. But as I said, Alpha Wealth has a Zurich pension scheme, and the employees are given guidance and advice around the funds that they have invested in. The Prisma 5, which would be mainly a fund appropriate for anyone up to age 55, typically, you can see there the performance is typically more than doubled some of its competitors, for example, compared to the likes of equivalent fund. And this is comparing apples with apples, by the way, of the likes of Irish Life. And obviously, you can see how it's vastly outperformed the likes of Standard Life, where one of the funds has absolutely performed dismally.
So, Nick,
Um,
is there a guaranteed return if one signs up to the auto enroll scheme?
no, so the way auto enrolled schemes are going to operate is that they're going to opt for three providers. We're not sure who they are yet, possibly the likes of Irish Life, Aviva, and Zurich. And there's going to be a fund selected, and there's no deviation from that, which is again a bigger problem for people, because part of the whole thing, and this is where like one fits all doesn't work. The key thing I'd say to people is you need to get advice when it comes to pensions. You need to get information around contribution rates. You should get projections. We talk about retiring early in Alpha Wealth. Can we help you understand about reaching financial independence by typically 60 years of age, if not sooner? Now, depending on what age you are, it's about making the most out of your pension provision. But the
So
key
what does
point,
one, sorry, Nick, and I don't mean to interrupt you, but what does one gain in their pension above someone who fully opts out? Can you kind of give clarification on that?
fully opting out of a pension scheme is really not a good idea. The fact is that one of the reasons the government are obviously introducing this mandatory pensions, which has been in place for over 10 years now in the UK, is that you will get, I suppose, additional payments, made to help you retire earlier. And the problem with Ireland is that you need 520 months worth of stamps to qualify for the full state pension, which is currently about 14,000 a year payable from the age of 66. Most people can't afford to live on that. I couldn't. So having a private pension is a must in Ireland as far as I'm concerned. And obviously for anyone who's earning over 42,000 a year, one of the advantages of pensions is that you get tax relief of 40%. It's a fantastic benefit, and the money in the pension grows tax free. Now, I'll talk separately to people about pensions and obviously their own personal situation. And again, it would be worth looking out for some of the upcoming webinars where we talk about these and some of the prior ones that we've done. But really, it is a huge opportunity, as I said, to embrace what the government are trying to do, but just don't go with the auto enrolled scheme.
Um, I have a few more questions. Is that okay?
Yeah, absolutely. I just wanted to mention, sorry, just now, I am doing a webinar next month in February where I talk about financial independence and certain changing habits. Now, look, it's a bit cheesy, 5 millionaire habits, but um, there will be some key principles in that, and there are others. My colleague David Looney is doing a Kickstart financial wellness webinar next Thursday, which is the 18th of February. One of the final things, just before we take the final questions, is what Alpha Wealth are offering is complimentary advice and financial wellness for companies. So if there's any company listening to this that would like us to give a, I suppose, advice piece to their staff, either it's directly on company pensions or any aspect of financial and personal welfare, we provide this. And we've done it for many companies, some very large companies recently, the likes of Google. Separately, for any individuals or employees that want to talk to myself and my colleague David Looney, we provide a financial consultation. It's all encompassing. €199 is what it costs. And we will help you financially manage your short, medium, and long term finances and make the most of your present situation and help you manage that over the forthcoming years. If there are a
So,
few more questions, Cleve, feel free.
yeah, it goes back to the thing around temporary and agency workers. Is there a time limit for temp agency workers, a situation whereby a contractor has been on 5 or 6 month or 5 6 month contracts, sorry. Are these temporary workers classified as employees after a certain time frame?
Again, that's a really good question, and that's the part that we're waiting for clarity from revenue. So I don't have an answer to that yet, but I will have that as soon as the final bill is published, which we expect in the next month or two. But if you do want to maybe reach out to me directly, and I can ensure that I provide you the detailed response when we receive it.
There's another question as well, which really, it's quite a specific question. Does anyone know how this relates to researchers and MTU? Last I heard, we aren't getting auto-enrolled until MTU signs some documents saying they will pay contributions or something like that.
It's the first I've heard of it, but the reality is I don't see how MTU are going to navigate getting out of auto enrollment. The key point that the revenue have made is that it applies to all companies who have employees or one employee. MTU fall into that category, so that seems to be maybe some issue, but I presume it will be resolved before auto enrollment kicks off, probably on the 1st of September.
If a new employee is on a 6 month probation, do you have to add them until after that time?
I think we covered this earlier. Again, auto enrollment is not about probation. It will be mandatory from the get-go. The employer has the right to defer up to 3 months, but no longer.
If an auto-enrolled employee leaves the country for good, is there any way for them to get their contributions back?
There is. So again, after the first 6 months, the employee can opt out of auto enrollment and they will be eligible for a refund of contributions. Again, we haven't seen the final detail as to how far back they can go. I presume it will only be in that sort of 6 month tranche. And obviously then, as I say, every 2 years, they may decide to opt out, but there's not going to be kind of a full refund of contribution, but they'll obviously be stopped at the time that they leave the country.
Often you have clients that receive a bonus that pay that into a pension for tax relief purposes. Is this possible through the auto enroll scheme?
No, it's not. And again, it's one of the biggest problems of auto enrollment. I can't say clearly enough how, whilst there's a lot of talk around auto enrollment and how it's a good thing, there are so many disadvantages of auto enrollment versus the other option that's available to companies. And the key thing for those companies is to understand about the best scheme for their employees and that they all have to be joined the scheme. Otherwise, you're going to have this hybrid of, two schemes, which I don't think is going to be very favorable.
And can the employer write off contributions against corporation tax in the same way as private pensions?
Yes, they can. So obviously it's an employer expense and it will therefore reduce the company's profit and it is a tax deductible expense.
Okay, I'm just going to finish on this question and hand back over to you then to wrap it up. So what if you stop working before the state pension? Can you access the scheme before 66?
No. And that to me would be probably the main reason why I wouldn't want to be auto enrolled. I don't want to retire at 66, and yet if I'm auto enrolled, I'll have no facility to access my pension before then. So having your own independent pension scheme through your company where you can access it from age 50 onwards, to me provides many advantages, and it can be phased as well. So for example, if you have a company pension arrangement, that allows you the mechanism to draw it down at different stages. Again, I can go into more detail about how that works. But I hope I've given a good impression of, what this is. We will be doing a further follow-up session. But for anyone who's listened to this call, as I said, I'm happy to give you more information and guidance and help you navigate. We will be sending on the slides and the video to anyone that registered for this, but please do feel free to reach out to me. My email address is on the screen there. It's very easy. It's just nick@alphawealth.ie. We do really appreciate your time, as I said to you guys, and please do look out for some of the ongoing webinars. Thank you to those who did complete the poll. I hope we've addressed a lot of the, I suppose, the questions that you had. And if there are any further questions, again, without any obligation, please do feel free to reach out to me.
So
Thanks
Nick,
so much for your time.
I'm gonna ask you to leave the chat box open because some more questions have come in and maybe you can answer them directly. Is that okay?
Absolutely. And if anyone does want to add another question to the chat, please do so, and we will address them. Thanks very much for your time, guys. We really do appreciate it, and we hope you enjoy the rest of the day. Thank you.